Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, January 5th, 4:35 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market still in a correction. Checking over here at the trend gauge, neutral on leaders. Still quite a few stocks holding up above the 21 EMA. Not making progress. Not very progress is very rare. We did touch on some breakouts yesterday, and then I understand we had some audio problems. So we will review those again today. So neutral on leaders. Short term, all five of the major indexes that we track in these videos are trending below their 21-day moving average. So that's in a downtrend. Everybody below the 50-day moving average, but we still got some slopes of the lines pointing up. So we're neutral with a bearish bias there. Long term, Dow, the only index above the 200-day moving average, all the slopes of the lines pointing lower. So in a downtrend there also. What happened today? We had a gap down in the morning because the employment data was too strong. Does that make sense? Strong economic data is bad for the market because that implies that the Fed is going to continue to raise rates and maybe keep them higher for longer. So then the flip side of that is, well, that it's really good news if you're looking at it from a recession standpoint, but every day you read in the headlines about more and more places laying people off, and that just hasn't trickled into the data yet. So as for now, the employment data strong. This came from two different surveys, and the indexes sold off pre-market when that data came out, and we really stayed weak all day. We did have one spike on Fed Speaker Bullard came out after 1 o'clock at Eastern Time and showed some dovish data with having some positive inflation expectations in the market. Popped temporarily on that, but by the end of the day gave it all back. But of course, the 3,800 level continues to hold like a solid brick foundation on I don't I'm running out of comparisons for it, but I really don't recall seeing a level tested so many times over such an extended period of time and it not give in. And if it does give in, I'm a little concerned about the downside that we might see. Well, not we, because we at Revere are basically flat right now, so we don't get hit with these downdrafts. G6, our growth index, down 1.2% on the day. S&P gap down 0.5%, ended up down 1.16%. NASDAQ 100 down 1.6, Dow down 1%, mid caps down 1%, Russell 2000 down 1.1, global 60/40 stock and bond down 0.7, in-house GROTECTION positive on the day by 0.05%. Did have a trade today that I'll review. And let's get into it. The charts of interest are going to be a follow-up on those breakouts that I touched on yesterday. I don't know what happened with the audio. No explanation on that. Never seen that before. We've been doing these for years, but it absolutely happened. So, and it's on Vimeo and YouTube, both of them. So here is, let's go to the S&P 500. First, we'll hit a 5-minute chart here. You can see the gap down. And immediately in the first 15-20 minutes, we came all the way down to 38.03 and it held, and we bounced, and then we came down again to 38.02 and it held, and we bounced, then 38.05, then 38.05 again. Here's the Bullard spike up to 38.28, then 38.30, and then the sell-off into the close, the last hour, giving it all back. But again, what was the low of that pullback? 38.03, and it held. We closed the day at 38.08. So this is a tighter range. And again, we're just coiling. And the tighter the range, the tighter the spring gets. The bad part about today is we couldn't get above 38.30. So with recent action, we had been at least testing 38.50 the prior days. You can see if we spread out a little more, there's 38.50 tested yesterday, the day before, and 2 days before that, the day prior, the day prior. So if we're setting up a lower high here at 38.30, that's not going to bode well for the bulls. Back to a daily chart. And also after one close, more than 0.1% above the ADMA in 14 sessions, back below the ADMA today and 14 sessions below the 21-day moving average, which continues to trend lower. Let's go to the NASDAQ 100. Very clearly the weakest of the indexes, testing the bottom of the range. Also a tight range here, but again, the worst of the ranges again today. Let's go to the Dow Jones Industrial Average. The best of the indexes today, but not by much. Can't get above this 21 EMA, and then the 50 is right there, and the 8 is right there now. Holding right around this 32,800 area over the last week and a half, a little bit further down there. So it's making higher lows, but we're only 1.6% away from the 200-day moving average, which is still declining on the Dow. Mid caps and small caps have shown a little bit of relative strength over the last 2 weeks. You can see how much further they are above the bottom of their range. But again, this big 448 to 450 area looms large as resistance to the upside on mid caps and on small caps. Again, a little bit of relative strength there, not quite as strong as mid caps, and again, very clearly below their 21-day moving average, and the moving averages are spread out further. The next catalyst is a jobs report, the government jobs report tomorrow morning at 8:30, and that always causes fireworks. The one that came out today was ADP, and it just normally doesn't have the impact as the government jobs report. And then the day prior, actually yesterday, the JOLTS job report came out. We've had 4 pieces of employment data that were all strong over the last 2 days. In all cases, 3,800 held, and the market made lower highs. Not really good there. RSP, talked about this yesterday, how it got back above the 200-day moving average, and the 50 gave that up today. Really no different between RSP and the market cap weighted S&P 500 today, although once again, those big cap NASDAQ stocks just absolutely got bludgeoned. But this was offset by the fact that utilities were weak, real estate really weak, basic materials weak. So that offset the tech. Lots of weakness across the board today. Really quick look at QQEW, down pretty much in line with the market weighted NASDAQ 100. Next up is the VIX. Back above the 21E, still in this. We're forming a triangle here, same triangle that we're forming on the indexes. A break of one in one direction will result in a break of the other in the opposite direction. And that's very clear. I mean, look how tight this is coiling with the declining 50 on the top, higher lows along the bottom. Something's got to give at some point. That catalyst might be the jobs report tomorrow that makes a decision one way or the other. Although it would be odd to have a weak government jobs report tomorrow in the face of 4 strong employment numbers that have come out today and yesterday. But really, what we're concerned about more is the reaction to it, not the number itself. Here's the dollar. First close back above the 21-day exponential moving average, going all the way back to November. That's not a good sign for the bulls. You can see we're coming off of oversold finally on the dollar, and this has a long way to run until it gets overbought, and that has not been good for stocks if that inverse correlation sticks. Again, a lot of things we keep an eye on here at Revere because they're all important. Anything that's not important, we've filtered out a long time ago. Here are bonds bounced at the 50-day moving average. The broad bond market lower today, but at the top of its range, which means prices should be down. The prices were actually mixed. Everything 10-year and lower, the price was down, the yield was up, but the 30-year TLT, The price was up, meaning the yield was down. So there's BND. Let's look at junk, JNK. Inside day today sitting right on the 21. Let's go to TYX, the 30-year. There is closed at the bottom of the range and negative, which coincides with the TLT being positive today. How about the TNX, the 10-year? Positive on the day, coincide, but at the bottom of the range. So it looks like this rolled over 50 now has been resistance 2 of the last 3 days, and we're sitting on the 21. So again, tightening up. Uh, Very clearly a break of this uptrend line, what was going on with the ADMA from yields and yields lower 3 days now. Now, is it just a reaction and then we continue higher, or is it a change of trend? Note we're coming off of overbought on rates, which would indicate we're going lower if that momentum continues. Next up is gold and silver. I talked about how silver failed its breakout. Oddly, because gold continued to sell strength, another gap down in silver today, down 2.3%. Not a surprise because the dollar was strong today, but first close below the 21. 2 closes below the 21 to us makes a trend. It's like fool me twice, shame on you. But again, this is going back all the way to November, just the opposite of what I mentioned a little while ago. Uh, but there's silver. Let's talk about gold, GLD. Also down, not down as much, sitting at the top of that former breakout area. So right now, 2 days of a breakout, testing the breakout area is completely normal, sitting on the ADMA. We'll have to see what tomorrow brings. Note we've been up near oversold for weeks on this, and it's finally rolling over. Although arguably it rolled over here, here, and here, just not as high. Just never made it into overbought. It was at the top of the range, but never made it into overbought. But now rolling over, another thing to keep an eye on, GLD. However, gold stocks shook it off for the most part. They were weak all day. Let's look at a 5-minute. They finished strong, even though not much. Look at this. They set the low early in the day, and then all day higher highs and higher lows. Definite strength in gold stocks. They bounced off this 30 level, which was yesterday's breakout area. So that stuck. Very nice. Good for gold stock holders. We want to see if it continues to hold. So those are the major indexes. Let's segue into, you know what? I didn't say why we do what we do at Revere. Shame on me. What kind of a public service announcement would this be if we didn't talk about what we do? We are active managers. Everybody that's listened to this a few hundred times is probably rolling their eyes right now, but uh, this right here is why we do what we do at Revere. Red across the board on the indexes, positive, not by much, but positive in-house. This is us taking a read on the market. It's under all the moving averages, and it's under the 200-day moving average. And if you're under the 200-day moving average, it's dangerous territory. This is where all bear markets occur, and we're in a bear market now, down 20%. Max last year was down 27.5. Off the high, we're down 20%. That's bear market territory. You need 38% to get back to even there. Revere clients have lost less than half of this. We just put out our client video. If you haven't watched it, please do so. A lot of good information in there, wrapping up the fourth quarter and what we're looking at into the first quarter. But this is why we do what we do at Revere. Now, that opposite of yesterday, market was up and we were down after that late 15-minute rally, the Santa Claus Savior rally. But just the opposite today, we gave up even more of it, closing at 38.08. 38.22 was the Santa Claus pivot. So one day given up the anemic 7 days of gains in the Santa Claus rally. If you're interested in this approach, reach out to me. We've had former clients come back over the last couple of weeks. Email is don@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. You can also email my partner, Dan Stewart, dan@revereasset.com. Love to talk to you. Reach out to us. And that's why we do what we do. Let's get to the tail of the tape now and some changes here. The 3 large cap stochastic indexes have gone to neutral from bullish. Mid and small still positive. G6 is mixed. NASI RSI, this is bullish. It turned up. This is a little bit of a laggard, but it is a strong trend when it trends. US dollar, we changed the font color to red on this because it's now above the 21 and trending higher on the stochastic. 10-year, 30-year yield above their 21, rolled over, heading down. VIX 22.51. Basically, it's not, it's above, but it's very close to the 21. Fear and greed, I don't think I updated fear and greed. Let's just do that in real time because we want to give you the best data possible from a 40 to a 44. So that's a 44 plus 4, still in fear, approaching neutral, one tick away from neutral. New sentiment indicator, we got rid of the put call, just not working anymore with all those short dated options. So AAII sentiment survey, they've been doing it forever. Bullish percent down to 20.5. This is one of the 60. So here's my shorthand for this. Up means bullish. Bullish sentiment is 20.5%. That's lower from last week. Bearish sentiment is pointing lower. It's at 42. That's down from last week. Well, how can bulls and bears be down? Well, because 6 percentage points from each went into neutral at 37.5. So neutral with a big jump. This 20.5% bulls is the lowest, one of their 60 lowest levels ever in history. So if you're looking for a sentiment, for negative sentiment, you got it here. Um, let's see how it all plays out. And you can go to AAII.com. Let's see what the real URL is. AAII.com, and the sentiment survey is free there. There's a good description of how they calculate it, what the historical numbers are. But this 20 bull is low, which is it's a contrary indicator. Low bulls tends to put in a bottom in the markets, and 3800 right now is acting like a bottom again. So here's the news that I already repeated. ADP payroll strong, jobless claims came out, fell. Bullard dovish on inflation, that hit in the afternoon. Fed hawk George, she was in the morning, she said she saw 5% through 2024. She's a hawk. That really didn't have much of an impact as the jobless claims data had already hit. Day count up 1 to down 1. Something new I'm adding. I've been tracking this. Uh, ADMA, this is our first day back below, but 13 out of the last 14 we've been below the ADMA, and 14 days trending below the 21 EMA on the S&P 500. We use this to track trends and to keep us on the right side. You don't want to be loading up when you're below the 21. You better be getting invested if you're trending above the 21. Expectations continue to be neutral as long as we're above 3,800, tested all day and it held. Same thing on the supports for the NASDAQ 100. Action today, I didn't spell it out, but tight all day. I did spell it out a little bit lower. Tight all day, 1% range. You'd think as much as I type that I would be a little better at it, but I'm really not. So there were the ranges. Sectors up, TLT, dollar and oils. Gold stocks were down big, came back, showed some relative strength in the afternoon, but still finished negative. Gold and silver negative. This is if you find a software stock that was up today, I'll give you $1. They were hammered across the board. Started with Microsoft yesterday. Microsoft sold off more today. If you thought you'd get an oversold bounce after a big stalwart stock like Microsoft got hit hard, you'd get a bounce. You didn't get a bounce. But not only big cap and desktop type software, but enterprise cloud stocks and security stocks all crushed today. Tech, XLK, pretty much if you've got all these down, tech's going to be down along with the big NASDAQ stocks, and they all were. But utilities and real estate also hit. You can't just hide in defensive sectors, is the point, and just think you're going to do okay because these can get hit too. And solar stocks down also. So the focus, the three things we have remaining, well, two things now because we stopped that at TMDX early. It did bounce later in the day, but finished only up 1%. We wrapped that up. We're essentially flat now. Long Nugget, long BA, short via SDS, and long the Dow. puts us basically flat at 0.0. We'll look at those breakouts. Bottom line for today, gap down on strong employment data, tight 1% range, weak all day, 3,800 holds. One of these days on here. Actually, I did about a week ago. 3,800 didn't hold. I thought that was going to be the death knell. But no, it came back above 3,800 as if it never happened that day. But like I said, here's what I'm concerned about here, this area right here. Last time we were this tight for this long, it was 2 weeks right above the 21. We were waiting on some CPI data. And when we gave way in a major way, 3 days down. It actually broke the day before the data came out. The data came out, we gapped down, and then everybody had a chance to digest it, and we gapped down again. That put in the low of leg 2 down. Then we had a rally, had leg 3 down, then a rally, and now we're looking at trying to hold on and prevent this fourth leg down. But to me, it's looking just too similar. The only difference is 21-day was above there, and we had 21-day support for these 2 weeks, but when it gave way quick. That's my concern. So now we're going to the breakouts, and I got 18 of them now, and they're sorted in order of how they performed today. Let's start off with Dick's Sporting Goods. Good stuff. Another higher high, trending higher along the ADMA. Boeing continues to be just a stellar stock. Higher high today above 200. DR Horton off the ADMA. High close relative to the last 2 days. Alibaba, another high close. Tried to pull back but bounced off of the 100 area. Win inside day closed slightly higher from yesterday. Planet Fitness bounced at the 21, so at least it's got that going for it, but very clearly a failed breakout above the 80 level. Starbucks breakout, tight day right around the high there, around 104. I guess technically it's not really a breakout. You've got 105.54 there, but relative to what it was doing, the gap up and holding it close enough. JD.com, gap up, inside day, closed right where it closed yesterday. NVO, tight 2-day pullback right into the ADMA, which it has been holding forever, basically. Nike, good stuff. Gap up yesterday, actually 2 gaps up. Tight close right near yesterday. Las Vegas Sands, tight close near yesterday. Here's where it starts heading downhill a little bit. Well, not quite yet. GDX bounced at the 30 level, closed at the high of the day. Good stuff there. Relative strength still near the highs along with price. Docs, is it failed for now? It's close. 2 days up, filled the gap, sitting on the ADMA. QFIN, down 1% on the day, but right hanging near the top of yesterday's breakout. GLD, back at the top of the base of the breakout. AU, closed at the high of the day, didn't fill the gap, still looking good there. HTHT, filled the gap, bounced at the 8, closed at the high of the day. Box, this is the sad one, failed breakout here, 2 days up, gave it all back and then some, and actually below the 21 and below uh, the low of the prior 2-3 weeks. And look what it is though, computer software. Software just got hammered today. There was no mercy on any software stocks. That's going to wrap it. As always, love to hear from you. Don at revereasset.com. Remember, folks, it's not how much you make in the market, it's how much you can keep. We've got all the rules here to keep you on the right side of the market. Keep watching. Our viewership grows day by day. We're very pleased with all the positive feedback that we get. And I just want to say again, if you watch us on YouTube and you click dislike, you better tell me why you didn't like it, or I'll hunt you down and smile at you when I find you. Uh, all right, let's wrap it up now. Wrapping up Thursday, January 5th. This is Don Vandenbord. Just the facts here at Revere. We're friendly, fluffy people. I'm a little too fluffy. I got to lose weight this year. Thanks for listening and have a great day.